Let's Get Down to Business is presented by Bravo, the marketing arm of Ash Brokerage Corporation, the practice enhancement company.
All this week, it's long-term care linked products. And on today's show, our introduction into LTC linked products. And with me today, nationally recognized LTC linked product expert, Bradley Gayhart. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician. Let's get down to business. Well, welcome to the show, Bradley.
Thank you, Steve.
Now, many of you as advisors, they saw Bradley on our show a couple weeks back. We were broadcasting live from the summit. We did a little piece on long-term care. People are really interested in the alternative of linked products. Nobody's debating, I don't think anybody with a real understanding of longevity, gerontology, where medical science is going. Everybody's kind of saying, hey, we're going to use some of this. But maybe I don't want to buy a straight up policy because what if I don't use it? What if I'm one of the 30% that never will ever have a long-term care or extended care need? So linked benefits, these products are they've really come of age.
No, definitely. And over the past 10 years, it's the new alternative to a traditional long-term care plan.
When I'm looking at this, the evolution, now you've been in this thing, I mean, you actually started out, I mean, as a young man. You've been into long-term care how long?
Oh, a long time, 20 years minimum.
Would you come out of high school?
I mean, pretty much. It actually started far before then. I jokingly say from time to time I grew up as an indentured servant in the long-term care industry because it started at such a young age.
Well, you know, of course, your father was one of the biggest general agents in the United States in this whole area, right? I mean, that was his forte.
No, absolutely.
So you were weaned on this stuff. You've been, I mean, when I tell people, hey, you know, you got 20 years under your belt, and the guy goes, he doesn't even look like he's old enough to be in our business, right, for that long a period of time. You've seen the evolution on this Link product. I mean, it's really evolved.
No, definitely. I remember when they originally came out, and folks said, I'd never put $100,000 into a contract like that. Mm-hmm. But over the past few years with the changes in the traditional long-term care space, it's definitely come of age. It makes more sense now with the cash value that's available for return and the leverage for long-term care. It just makes a lot of sense. Let's
talk a little bit about the economic leverage because I love things that have financial viability. I really do. I have an appreciation for it. Talk a little bit about the leverage.
Well, you know, depending on a client's age, you're looking at leverage from anywhere from 2.5 to possibly 5 times on the amount of money that you put in. You put $100,000 in, you get $450,000, say, for a long-term care benefit down the road, paying out maybe at a 6-year clip of $6,200 a month. So in today's dollars, we're actually covering the cost of a long-term care in a skilled facility.
And if I didn't use it?
You have a guaranteed death benefit.
And would I have cash in there as well?
Absolutely. And if you elected to never use that policy, you could always go in and pull that cash out.
Wow, to me, so really we need to understand, and I've read some of your notes and how you write, we need to understand linked benefits is somewhat of an asset.
It definitely is an asset. And the way that I actually put it in a client's portfolio is as an asset. That's how I talk of it. It's a financial decision. It's not so much an emotional one when you're selling linked benefit.
Well, later on in the week we're going to talk about this, but I noticed that one of the talking points of next couple days from now is we're going to talk about how high net worth clients actually prefer LTC linked products.
Absolutely, they understand assets.
Well, that's why I'm trying to come down to a balance sheet issue here. And most people, we're doing a retirement portfolio. Everybody gets that. But then when we introduce any kind of insurance product, everybody kind of goes, whoa, you know, that's outside my 9 dots, it's not conventional. But when I'm looking at this, adding an annuity value, especially under the law, and we're going to get into this a couple days from now on the whole issue of the Pension Protection Act and things of this nature. But an annuity, adding value to retirement planning and LTC planning, I mean, that is new. I mean, to most, I know it's been around for a long time, but really it's just getting its legs in the market. Talk a little bit about that, because I think that's unique.
Well, the beauty of the Pension Protection Act and annuities specifically in long-term care is the fact that if any benefit is derived off that annuity, it actually comes out tax-free to pay for a long-term care event due to that Pension Protection Act. So if you have significant gain in an annuity, it's a great way to extract dollars on a tax-free basis from that annuity.
And can I use this now? Because I love that idea, but can it also be used for assisted living at home, which is 90% of everybody's, that's their dream, right, during retirement?
Definitely. Well, Steve, let's face it, no one's ever going to a nursing home if they elect not to.
If they can avoid it.
Yeah,
right.
Absolutely. So home health care, it can definitely be used for home health care.
Well, I love this because now so I could take any annuity, you know, and we'll get into this later on in the week, and even if I have an existing one that has gain, and if I 1035 it into one of these annuities that have these provisions, these LTC linked benefits, when those benefits come out, they're free.
Absolutely.
Well, to me, that's a huge issue, and I can't believe the government actually wrote this piece of the law. It sounds like one of the best legislation issues I've ever seen in a long time. You know, we're also going to talk about how to access this, because, you know, people say, well, I got it now. When do I know? When do I trigger it? When does the event start? You know, I kind of want to know when all that. Talk a little bit about getting introduced, because we're going to talk about this all this week. We're talking about all these subjects. I'm just kind of giving an intro into it.
No, definitely. And benefit triggers for policies basically fall into two categories. The first one is 2 of 6 activities of daily living. Bathing, dressing, toileting, transferring, continence. And then also severe cognitive impairments, so Alzheimer's disease, dementia, things of that magnitude, that would also trigger a claim.
In your experience, because we have a tale of two cities, two products, some people are using the life with the LTC, some people are using the annuity. Have you seen any trend? Which way? Is anyone outweighing the other?
I would say more folks are going to the linked benefit than the linked annuity. The linked benefit products, the life with riders or with long-term care built into those, that's a little bit higher usage, I would say, over the past few years. The linked annuity, however, does come in very handy when you have an individual that might not qualify for one of these linked benefits. Some of the products actually have enhanced income riders that might double or triple the income that spits off the annuity on a lifetime basis if you have a long-term care event. So there's a lot of unique strategies that can be applied either direction, but I would say overall you're seeing more usage in the linked benefit.
And we're going to be talking about all this.
Definitely.
I mean, this is what I like is we're going to break all these little talking points down that we've talked about in the first segment, and we're going to use those for our whole week talking points. When we come back from the break, we're going to continue our introduction to LTC linked benefits as another option in purchasing protection for extended care. And remember, you can watch all of what we're talking about on our LTC manual right from Backroom Technician on our website at downtobusiness.ashbrokerage.com, or just sign up for your own 30-day free trial offer at Backroom Technician at brtnow.com/trialsignup.aspx. We'll be right back with more from Bradley right after the break. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, welcome back, everyone. I'm Steve Savant with Bradley Gayhart. And remember, you can watch all our episodes of Let's Get Down to Business, including my weekly consumer show, Steve Savant's Money, the name of the game. Just hop out to ashbrokerage.com and click on the show logo. It'll take you right out to our shows, and you'll be able to view any of them, even in our archives. And just a heads up, before moving forward with any of the ideas you hear on our show, always consult your tax advisor, legal counsel, as well as your broker-dealer compliance officer. Well, let's get down to business. We're talking about continuing our introduction into LTC linked products as another option to purchasing extended care. And I've kind of gotten into this new way of explaining this. I've been using the phrase more and more, extended care. Instead of long-term care, I've kind of graduated to a kind of a new way of explaining it. Extended care. When I'm talking about this, Bradley, when we're talking about the last 20 years, we started to see nursing home policies kind of coming out. They were clunky. They were, in my view, pretty expensive. But if you really had a disposition, your family history had a disposition for disease, or mom and dad and a lot of other people were doing nursing home confinement, you kind of felt like, hey, you had to kind of go that way. Okay. This is kind of giving us an option. I'm looking at this. Talk a little bit about, before we got into the new one, which we've all been talking about, the 2006 Pension Protection Act. There were a couple acts before that. I guess I'm trying to remember, because I guess I was not awake at the day. I'm such a mortality guy. I never look at linked benefits before. Kasem-Kennedy Act. Talk a little bit about that.
Well, I mean, back in 1996, the Health Insurance Portability Act really created what was called at the time a tax-qualified long-term care plan. It defined the benefit triggers. Most importantly, all policies sold prior to that were called non-qualified plans at that point moving forward. The non-qualified plans had a very distinct feature in them. It had a benefit trigger that was called medical necessity. So let's say you had a doctor, Steve, who you were buddies with. He could always check the box and say that you might need care. certain insurance carriers might not have liked this, especially in certain areas of the country, because they felt their claims were getting a little out of whack due to that medical necessity claim. However, the government came along and said, we're going to definitely define this. And they defined it by the 2 of 6 activities of daily living and made those standardized across the board in all states. Because states did have the capacity. At the time, California was, say, 2 of 7 ADLs. Texas was 2 of 7. Other states were 2 of 5. They did uniform that 2 of 6 activities of daily living across the board. And then they also laid in the severe cognitive impairment definition.
Well, I'm glad to hear about the 2 for 6. Honestly, I thought at the beginning, when I remember this back in the day, I thought that was very benevolent. I thought it was going to be more like 4 out of 6, 3 out of 6. You know, it seemed like 2 out of 6. Well, that's pretty good to trigger it. So it's really a low threshold when you think about it.
Yeah, but it's still a nice hurdle. It definitely proves that an individual can't take care of themselves to the capacity that they need to maintain life.
Well, fast forward to today, you know, we get a lot of press on LTC. Hey, it's too expensive. The press really isn't into it. But I never know if those are the press that are supported by the mutual fund companies that are running ads who just don't want to see their clients spending money outside mutual funds, right? So, and that's not a complaint, it's just an observation. But I noticed that there was a lot of mispricing going on at the time that we had this. And this is why I've noticed that the LTC community, that the actual carriers involved, this has contracted quite a bit. I mean, there's not that many players left.
Yeah.
How about in linked benefits, though? Has that expanded?
That actually is expanding. Not only the linked benefit field is expanding, but also the life insurance field that have access riders that pay for long-term care. That's actually increasing as well.
Well, is that the same? I'm thinking of the Vanguard, like a Lincoln National product, MoneyGuard, versus other life insurance companies that are just throwing on an LTC rider. Is there a distinction?
There's definitely a distinction.
Okay.
A true linked benefit product, such as the Lincoln Financial, State Life, a couple of the other ones that are out there as well. They have a lower death benefit, so the mortality costs are definitely lower. And then what it does is it leverages those dollars that are put into the policy to fund a long-term care event.
Have you seen much gender-based product pricing?
Oh yeah, definitely. Over the past couple of years on the traditional long-term care space, most all carriers, depending on your state now, have gone to gender-based pricing.
I've noticed, is it my anomaly, that there's been some uptick in the priciness of inflation riders?
Oh yes.
I mean, out of nowhere.
Definitely. They've definitely taken a large hit. That was an area that was underpriced. But if we look at the economy at large, over the past 5 years, with interest rates where they are, just in the Fed, it's very difficult to imagine an insurance company can get much leverage on their side of the ball either, investing those premiums. So it's hard for them to fund those compound inflation riders that they've had in the past.
Bradley, do you think that people are looking, especially on the life side of the equation with an LTC rider, do you see them? Is the guaranteed death benefit a major value proposition for the client?
I would say yes. I would say it's the fact that a lot of folks believe that they're never going to use or never going to have a long-term care event. So they want some guarantee that they're going to get their premium dollars back or some semblance of those premium dollars. The linked benefit, it really affords them 3 benefits. It affords them that guaranteed death benefit, or they have the option to use the linked benefit with leverage. And then finally, if they want their cash back, they could literally go in and pull their dollars out of that contract and get rid of the contract. So they love those 3 benefits.
I mean, they can walk without a hit.
Walk without no hit. Yeah.
Period.
Absolutely.
Well, see, to me, why would a consumer not look at that?
They are, and it's happening more readily.
Unbelievable. I love the flexibility and the options during retirement. Well, that's our show for today. Remember, you can read all my online news commentary, advisor blogs, and articles on Producer's Web, as well as my answers to consumer questions on the Insurance Library. And don't forget, you can view any of our past episodes on our on-demand section located at downtobusiness.ashbrokerage.com. So don't forget, you can follow me, Twitter, Facebook, LinkedIn, or just email me, stevesavant@ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. We'll see you tomorrow.